Every day, the world's financial markets tell a story shaped by the hopes, fears, and decisions of millions. These stories unfold in real time, with every tick of the market reflecting the collective mood and expectations of investors, business leaders, and ordinary people alike. The numbers and charts we see aren't just abstract figures. They represent the ambitions of entrepreneurs, the strategies of corporations, and the dreams of families planning for their future. For Taiwan, its stock market is a vital barometer, measuring the value of its leading companies and the health of its economy. The ups and downs of the market reflect not only local business performance, but also the island's connection to the global economy. When international events ripple across the world, their effects are often felt right here, in the heart of Taipei's financial district. Watching the Taiwan Weighted Index isn't just for traders. It offers clues about economic direction, business confidence, and future opportunities for everyone. Whether you're a business owner, a student, or someone planning for retirement, the index provides a window into the forces shaping your financial future. It's a tool that helps us anticipate changes, adapt to new realities, and make informed decisions. These numbers are the pulse of a nation's economic life. They beat faster with growth and slow with uncertainty, offering a real-time snapshot of how the country is faring. Each fluctuation tells a story of innovation, competition, and resilience in the face of challenges. When the market rises, it signals optimism. Companies are growing, jobs are being created, and innovation is thriving. Investors feel confident, and that confidence can spread, fueling further growth and encouraging new ventures. It's a virtuous cycle that can lift entire communities and inspire the next generation of entrepreneurs. When it falls, it can mean caution, perhaps due to global trade concerns or shifting consumer habits. A downturn might prompt businesses to rethink their strategies or families to tighten their budgets. But it's also a time for reflection and resilience, as people look for new opportunities and ways to adapt. Ignoring the market's rhythm is like ignoring the weather forecast. You risk being unprepared for what's ahead. Just as we check the weather to plan our day, staying informed about the market helps us navigate financial storms and seize opportunities when the sun shines. By tracking which sectors rise or fall, we get a clearer picture of what's driving the economy. Is technology leading the way, or is manufacturing taking the spotlight? These trends reveal where innovation is happening and where challenges may lie. Sometimes, a single sector's movement can be traced back to global events, like supply chain disruptions, new government policies, or shifts in consumer demand. Understanding these connections helps us see the bigger picture and anticipate what might come next. For example, a drop in manufacturing might hint at slowing global demand, while a surge in tech could signal new innovation. These shifts don't just affect companies, they impact workers, families, and communities across the country. These details help us understand the why behind the market's moves and their impact on our lives. By paying attention, we become more than bystanders. We become active participants in the economic story unfolding around us. Ultimately, paying attention to the stock market makes us more informed citizens in a global economy. It empowers us to make smarter choices, whether we're investing, starting a business, or simply planning for the future. The daily closing bell is more than an end. It's a snapshot of economic activity, offering lessons for everyone, from seasoned investors to beginners. Each day's results are a chapter in the ongoing story of progress, challenge, and opportunity, a story that belongs to all of us. On Thursday, December 11, 2025, as the final bell echoed through the halls of the Taiwan Stock Exchange, the trading day drew to a close with a modest decline. The atmosphere was a blend of routine and anticipation, as traders and investors alike paused to reflect on the day's events. The Taiwan Weighted Index fell by 0.43%, a small but telling move that caught the attention of market watchers. While not a dramatic drop, it was enough to signal a subtle shift in sentiment, hinting at underlying caution among participants.
This dip signals that sellers slightly outnumbered buyers, nudging the market lower. It's a reminder that even minor imbalances between supply and demand can sway the index, reflecting the collective mood of thousands of investors making decisions in real time.
Such fluctuations are normal. Markets rarely move in a straight line. Every trading session brings its own rhythm, with prices rising and falling as news breaks, earnings are reported, and global events unfold.
A drop like this is just part of the market's natural ebb and flow. It's a healthy sign that the market is responding to new information, adjusting to shifting expectations, and finding its balance.
The decline suggests a mood of mild caution, perhaps due to global events or a pause after recent gains. Investors may be weighing uncertainties, such as international policy changes, economic data releases, or shifts in global demand, that influence their willingness to take risks.
The index acts as an average grade for Taiwan's public companies. When it falls, it means more companies lost value than gained. It's a snapshot of the market's overall health, capturing the collective performance of hundreds of businesses across diverse industries.
This result sets the stage for deeper questions. What drove the change? Which sectors were most affected? Was it technology, manufacturing, or finance that led the decline? Or did global headlines play a bigger role?
The closing number is just the headline. It's the starting point for understanding the day's financial story. Behind that single figure lies a web of trades, strategies, and reactions to the day's news.
To truly grasp what happened, we need to look beneath the surface, examining the details that shaped the day's outcome. By analyzing which sectors and stocks moved the most, and understanding the reasons behind those moves, we can begin to piece together the full story of the market's day. To understand the market's dip, we look at the sectors under pressure: optics, plastic, and textiles.
The optics sector, tied to global demand for electronics, fell, hinting at concerns over gadget sales or rising competition.
The plastic sector's decline may signal weaker demand for goods or higher raw material costs, reflecting broader economic trends.
The textile sector, sensitive to consumer spending, also dropped, suggesting worries about household confidence and export demand.
Weakness across these sectors points to broad caution, not just isolated issues.
Investors likely reacted to larger economic worries, pulling the entire market index down.
Even on a down day, some stocks shine.
Walton Advanced Engineering Inc. surged nearly 10%, closing at a record high, proof of strong investor confidence.
Zinwell Corporation also soared, hitting a new yearly high, likely thanks to company-specific good news.
Lunghua Electronics joined the winners, posting a near 10% gain.
These gains show that opportunities exist even in weak markets. Success often comes from unique stories or strong results.
The market isn't a monolith. It's thousands of individual stories. Walton, Zinwell, and Lunghua each found their own path to success, independent of sector trends. Their performance reminds us to look beyond the headlines for pockets of strength.
For every winner, there's a loser. Favit Inc. dropped over 8%, likely due to negative news or forecasts. Global View Co. Ltd. fell nearly 6%, suggesting a wave of negative sentiment or new information. Fulgent Sun International Holding also tumbled, down over 5%. Clear signs of company-specific trouble.
When a stock falls much more than the index, it's usually about that company, not the whole market.
These sharp declines highlight the risks of investing in individual stocks.
While some stocks soar, others stumble. Diversification helps cushion the blow.
The day's biggest losers pulled the index down and remind us of the value of spreading risk. Company-specific risks are always present, making a balanced approach wise.
Stock markets are linked to global commodities like oil and gold.
Oil prices dipped slightly, signaling minor shifts in demand or supply, affecting costs for many industries.
Brent oil also fell, showing a shared sentiment across global energy markets.
Lower oil can help manufacturers but hurts producers, a mixed impact on stocks.
Meanwhile, gold edged higher, as some investors sought safety amid market uncertainty.
Gold's rise on a down day for stocks fits its role as a safe haven.
The gentle moves in oil and gold reflect subtle shifts in risk appetite, not panic.
This quiet dance between commodities adds depth to the day's market story.
Currency markets are another key piece of the financial puzzle.
The US dollar strengthened against the new Taiwan dollar, up 0.43%. This makes Taiwanese exports more competitive, but can also signal capital leaving the country.
The currency move mirrored the stock index's dip, hinting at foreign investors pulling back.
The TBD to CNY rate stayed stable, showing no new cross-strait tensions.
The US dollar index fell, meaning the dollar's strength was specific to Taiwan, not global.
The day's story was about a slight retreat from Taiwanese assets, not a broad currency shift. Currency moves can reveal where global money is flowing.
For most people, a small market dip feels distant, almost like background noise. But even a minor change can ripple through your retirement accounts and investments, sometimes in ways you don't immediately notice. It's easy to overlook these shifts, but they can have a real impact on your long-term financial goals.
A 0.43% drop is just a small bump for long-term investors. No need to overreact. Over the years, markets have always had ups and downs, and these small dips are part of the journey. Staying calm and focused on your long-term plan is often the best response.
Daily moves remind us that markets fluctuate and patience is key. It's important to remember that reacting emotionally to every change can lead to poor decisions. Instead, trust the process and give your investments time to grow.
Use these moments to review your risk and diversification. Ask yourself if your portfolio still matches your goals and comfort with risk. Adjusting your strategy now and then can help you stay on track.
A balanced plan helps weather both gains and losses. By spreading your investments across different assets, you can reduce the impact of any single market event. This approach helps you stay steady, even when markets are unpredictable.
The day's winners and losers show the risks and rewards of picking individual stocks. While some stocks soar, others can fall sharply, making it risky to put all your money in just a few companies.
Most people benefit from diversified funds, which spread out risk. These funds invest in many companies and sectors, so your money isn't tied to the fate of just one stock or industry.
This way, one bad stock won't ruin your portfolio. Diversification acts as a safety net, helping you manage uncertainty and keep your investments more stable over time.
Currency and commodity moves also affect daily life: import prices, gas, and more. When the value of the dollar changes or oil prices shift, you might notice it at the pump or in the grocery store.
Understanding these links makes you a smarter investor and consumer. By paying attention to how markets connect to your everyday life, you can make better choices for your future and feel more confident about your financial decisions.
The 0.43% dip in Taiwan's index was a normal fluctuation, not a crisis. Sector weakness and currency moves reflected subtle shifts in sentiment, not panic. Even as the index fell, some companies soared, reminding us to look beyond the headlines. The day's events show the value of seeing the big picture: industry health, investor confidence, and global trends. Staying informed helps you make better financial decisions and understand the world's economic dance. In a connected world, market moves in Taipei can ripple to New York and Berlin. By understanding the winners, losers, and context, we become informed participants, not just spectators. Knowledge empowers us to navigate the complexities of personal finance and the global economy.